company that knows how to make things that people buy forever. Post-it notes, right? I mean, CDs back in the day, but you know, long-lasting kinds of market opportunities. And so what we're looking at here is the possibility that this could kind of get going back again. And I think once it does, then people will realize, what were we thinking? This was ridiculously oversold. Well, you can get from 200 to 260 in a fairly short period of time. That's a 20% gain, no, 30% gain. And we could probably traverse that in the space of just a couple of months. So you're going to want to keep that out. Don't know that it'll happen, might not happen, but if it did happen, you'd want to be around for it. And meanwhile, the most important thing is, if you got in, you can get out at the most recent low, or even the you know, definite April 30th, or May 1st rather, low. You know, either way, that's a small comparative stop loss compared to the opportunity, even just the opportunity of getting back up and getting into the gap area here at 217. You know, that's $17 up and about $5 down. So, you know, it's 3 to 1 just getting started. And so I really kind of like the 3M trade. Think that's pretty good. Second trade I want to tell you about is one that we have mentioned earlier before. Got to change my watch list to this. Got to go check out my penny stocks. We talked about this a couple of weeks ago, was it? Maybe 3 weeks? Anyway, we talked about the fact that Costco, the Blue Apron, this is the service, the company that runs the service of delivering pre-made meals to your door. And they're pretty good, right? So anyway, they're gonna have little demonstration and feature and product stand kinds of things within Costco. They're gonna try to market to the Costco crowd. If you think about it, that's a completely genius move. Anybody who shops at Costco or Sam's Club or BJ's back in the East, or you know, any of these membership warehouse kind of places, anybody who shops at these kinds of places is someone who's thinking, I don't want to go to the store, not any more than I have to, right? And when I go, I want to get good stuff at a good price, and prepackaged is also good. You could tell all that by what's at these stores. At Costco or at Sam's Club or these others, you get a wide variety of quality stuff at a good price, but you also get a lot of, when it comes to food, a lot of prepackaged. Here's a bucket of potato salad, or a container of tabbouleh or something. It's really just grab it, take it home, eat it. Stu Leonard's store back in Connecticut and Westchester County, New York, famous store. They're all about, it's this huge store, and it's got one winding path through the store, and everything in that store is prepackaged. I went in there one time looking for a box of pudding because I had other reasons to go, but while I was there, my wife called me and said, hey, can you get a couple of vanilla pudding packages? They don't have them. You want vanilla pudding, they're coming in the little cups. They're already made, right? That's the whole store. It's like you show up, have a lot of fun buying what you're going to eat tonight when you go home, right? So Costco's not that way. Costco's more like you go and you buy in bulk, but you pick up a few pre-made, preset items. And so you think about it, anybody that would have that in mind, looking for value, but also looking for convenience. And that spells Blue Apron, right? At least that's what the company wants people to think of. So that's their target market. And, Blue Apron is really like, empty nesters or young professionals. And I got to thinking about it, it's like anybody that has dogs is probably the market. Just not like family pets, but the kind of like dogs instead of kids things. Oh, yeah. Those kind of dog owners. I think that is absolutely the Blue Apron market. I don't know if the Costco move matches with that crowd, but what they do match with is the fact that they've got a much better opportunity to be seen by people who are likely to buy and to buy. And Blue Apron is kind of a subscription thing, right? It's like you would subscribe to an annual membership to be able to get these deals. So I think it matches the mentality of the people there. I think it's a genius move because you wouldn't necessarily think of that. You'd be thinking, well, how can we advertise online, and how do you get on Amazon, and no. Just go real, go live, show up, talk to the people, be there at Costco. I think it's wonderful. I don't know if it's going to work, But if it's going to work, see, this is the thing. With penny stocks, low price stocks, you never know the future. What you do know is that if the future turns, if something bad, every penny stock is bad. They're all failed businesses, right? If any one of them gets any news, any good news, any possibility of, hey, the future looks bright, then boom, up that stock goes. So here we've got right here, blue line represents, after talking about it here, that the blue line is the place that I managed to get in. Why? Well, because it's a break of resistance. Speaking of the cup and handle, this is a cup and handle reversal, loving it. Look at this, see this, we're coming all the way down. There's the rounded bottom. See, the volume pattern is also rounded just like that. Here comes the handle, comes out, comes right back, and then now we're headed up. We've broken out of the handle. If you're a cup and handle player, today is actually the entry signal. Where do you get in? Anytime today, but usually, technically, the place they test these patterns from is the opening tomorrow. So your timing is fabulous. Now, full disclosure, right? I'm already in this stock. So if I get 1,000 of you to come along and buy the stock after me, it only helps me, right? It's not why I'm talking about it, because I don't trade based on the hope that somebody else. I trade based on my own risk management. Blue line's where I got in. Red line is my stop loss. That's where it is currently. It was clear back down here, right? So what I've done is, now that the stock has run up, come all the way back and run up and broken its old high, that's a key signal for me. That's where I like to jump in. And so, jump in, I already said I jumped in, right? No, jumped in number 2. So I buy a certain number of shares, gonna buy another number of shares, and then move the stop loss up to break even. Risk is the same, opportunity is double. Cool, huh? So anyway, we have this whole setup, and whether you like it the way I like it, or you're just interested in what's a low price stock that might go. Well, here, this thing might go. Why? Because, let's see if I can zoom. No, that's playing with the pad here, messing that up. We're gonna go this way. Yeah. All right. Look, see, this stock was at 11, or well, it ran up to 11 on its IPO, and since then it's come crashing down. There are enough investors that will take it right back to 10 or 11 if they get it figured out. Think about that. That could be 5x within 3 to 6 months on this stock if all of a sudden something goes good. Well, we've got a catalyst, a potential catalyst, this whole thing with Costco. If the Costco thing works, kaboom, up we go. So what if it doesn't? You got to have a plan. Right now, that red line, that's your plan. If you don't have any better idea, that is your plan. You buy wherever you buy, you set your stop loss way back there, only buy enough shares in between to satisfy your risk tolerance. And if you don't know what all that dynamics is about, you really ought to check out the Trader Continuum, because that's the kind of thing we talk about in our subscription webinars. So meanwhile, let's switch gears and go to the next segment and talk about Forex.
Awesome. Okay, first of all, I want to remind everyone that you can chat with us in this this live broadcast. It's a little chat blurb thing, little button. Looks like a chat box or whatever. Anyways, you click on that and it brings it up. You can put in your name. You don't have to put in an email address or anything else. Guest chat. And you can chat with us, ask questions. We have it up the whole time so we can answer your questions live. Also, I wanted to throw this out there before I forget. Scott Cook is going to be in tomorrow. He'll be joining us tomorrow to talk about the penny stock trades that he's in. And
if you like that blue apron trade, you're going to love Scott Cook.
Yeah, that's all that he does is penny stocks, and he trades twice a day. He trades at the market open and at the market close, and gosh, he places a lot of trades. So he's pretty awesome. He'll be with us tomorrow during our broadcast, and so if you like penny stocks, you like this type of stuff, you should be here for that. Okay, so now we're going to jump over into the Forex type stuff. Let me bring up my area here. All right, so Saturday night, I sent out a watch list of currencies that I am watching for this week, for the beginning of this week. And I base this watch list on divergent setups that I find on Vantage Point. Vantage Point is this software that uses like artificial intelligence type stuff, and I really like its neural strength indicator, and I use that for the divergence type setups across, I don't know, a lot of different currency pairs. The one that I liked in particular was the US dollar Swiss franc. It's actually the one that I started with in my watch list. Let me bring up that watch list really quick as well. That way we can all be on the same page here. It's like a newsletter, so being on the same page means actually something literal this time. All right, let me bring this up. Preview, and there we go. Sweet. All right. So the US dollar Swiss franc, the British pound US dollar, the Canadian dollar Japanese yen, the euro New Zealand dollar, and the Australian dollar New Zealand dollar. I tried to pick 5 different currency pairs that are not correlated too much. And these are some of the setups that I found. So the first one was the US dollar Swiss franc. And that one actually turned out to be relatively beneficial right off the bat. So if we then go over to, let me bring up my trading view charts. There we go. Awesome. All right, the US dollar Swiss franc, when it opened, I'm going to have to zoom in really far for this one. When it opened yesterday, it actually, it opened, gosh, where did that open? All I know is that I placed a trade relatively soon after it opened down here, and then we jumped up a little ways, as we usually do on a Sunday when the market opens. We don't usually move in the direction that we're going to be headed in for the rest of Monday. So I waited until later last night, and then I placed a trade on the US dollar Swiss franc, and it actually is doing pretty good right now. It was positive 100 and, let's see, where is that price? 99.90 down to, yeah, so it was positive 20 pips, which is pretty cool for me. I mean, I placed a relatively decent sized trade compared to what I normally would place, and so it was up $20. That's pretty cool. Sorry, I just was looking at the setup on my other chart here. Okay, let's head back over to Vantage Point. I want to take a look at some of these other currency pairs that I was looking at shortly before we got started. The pound Swiss, I was looking at yesterday, hoping that we were going to have a nice run upward a little bit higher, which we did not have at the end of last week, and subsequently just blew any divergence out of the water that we may have found. So let's see, the Canadian dollar, Japanese yen, we talked about over the weekend. We had a high peak in our neural index, neural strength indicator down here at the bottom, and we did have it break higher in price, but then price continued to go higher. So we've got this high peak up here, but the neural indicator is actually moving downward. So we are looking at some sell trades and sell setups. Now, the reason why I bring these up now is so that we can look for potential entries into these currency pairs. So the Canadian dollar, Japanese yen, you never want to place a trade based purely on one thing. So we don't want to place a trade purely based on divergence. Divergence is more of an indication of where the market might be moving at some point, and it's best not to base your entire strategy on just divergence only. So with the US dollar Swiss franc, I actually waited until it had gone up to its just about its week high, or where it closed, or where it had gone on Friday. Sorry, brain's misfiring with the neurons and everything at the moment. So I waited for it to go up to the high of Friday, and then I placed a sell trade in the opposite direction. So that's why the US dollar Swiss franc actually worked out pretty good. But with the rest of these, they weren't quite as strong as the US dollar Swiss franc. So I was waiting for some other types of setups to occur. Did you have stuff you want to talk about too?
No,
so you're like flowing through a bunch of charts. Pretty awesome.
I got some currencies here too, but it's okay.
Yeah.
Don't slow your flow.
No, I'm going to keep going. I'm going to keep going, for a few more minutes. But okay, let me head back over to the trading view charts. So the Canadian dollar, Japanese yen, If we zoom out on this chart, let's see. Okay. See this? I don't know. It's kind of hard to see on these particular charts over here, since we're looking at this all the way over here. But this is the indicator that we built last week. And it has this little little valley that was created. Valley? Yeah, valley. It had this little trough.
Take your pick. Valley trough, yeah.
Okay, we're going to go with trough. All right, so I had this little trough that we broke down below, and actually we paused at that trough right here. And as we were creating a brand new trough. So then we came down and we paused at this brand new trough. And then we came down, we paused at this brand new trough. We came down, we paused at the brand new trough. We kept pausing at all these troughs, and now we're headed back up. And we just turned red. Now, what I like about these particular types of trades, and this indicator in particular, when we have these nice peaks, then if we have a turn around, then we usually have a few days of nice sell trades or nice buy trades. And right now we're looking at a potential peak and a turnaround. So as soon as we print this candle, as soon as this candle finishes up, if we are able to print another one of these peaks, then I'll be looking to trade that one downward, because we've turned red now, or pink, or whatever you want to call this color. We've turned red, and we have a potential peak right here, and we're pausing again. Look at this. We paused at this peak again too.
Yep.
That is so cool. I love this indicator.
Yeah.
This thing's just fantastic. All right, so once this candle closes, and once we actually, in the next day or two, hopefully, we have a new peak, then we'll call that a pause, and we're gonna trade downward just for a couple of candles. So maybe, hopefully, we'll be in and out of this trade by the end of the week. Yeah, so that's the Canadian dollar, Japanese yen. That was the main one that I wanted to cover, because we already looked at the US dollar, Swiss franc. And let me see if I can figure out where that, there we go, okay. The other one I wanted to look at was the British pound US dollar. Where was that one at? I'm pretty sure. Let me go over here and, this monitor is not good for this. British pound US dollar, there we go. Okay, British pound US dollar. This was the other one that I was looking at with divergence, and I've been looking at this one for the past 2 weeks, because we've got something going on here that's going to be turning into divergence, I hope. I think. It is relatively divergent, but the problem is we're not actually forming any type of troughs in price. Yeah, the market's going down while the neural indicator is going up, which points to divergence, but gosh, I really wish that we had a trough that we could see happening in price when we're not. We're just going sideways right now in price on the British pound US dollar. And so once we see an actual trough start to form, if we haven't broken our divergence setup, which is based on this trough down here, and then some of these later troughs up here, if we haven't broken that, then we're going to be looking at a nice divergence trade going back upward. And
So just to point out here really quick before you get too far, this the vantage points indicator, that little black box out there,
yeah,
that's the predicted direction. And this chart that you're looking at is yesterday's end of day, close of day, right, session. And so this predicting that today's activity will be downward. It will break the lows, and then it will trash the divergence, right? That's the prediction. And that came in at 6 o'clock Eastern time yesterday, correct? 6:10?
Yeah.
Yeah. So, as it turns out, today we're already down another, 50 to 26, 25 pips below the lows on that chart, as it turns out. There.
Yeah, so it actually ended up turning out looking almost just like that vantage point candle over here.
Right. Yeah,
this,
exactly.
This vantage point
now,
predicted price
So
candle.
within the next hour, if all of a sudden that were to whip around and go back up and close higher, that would complete your divergence. But in fact, not even an hour. We've got about a half an hour till the market closes, right? Or did it just close?
No, we've got an hour before.
The U.S. stock market just closed.
Yeah.
And so that's probably not going to happen. the big turnaround. I would say we're looking for another round of this, pink cloud, so to speak, that you got on your indicator. That's what's coming. But it probably won't go down as far as that. And then the true divergence will occur as the end of that activity, whatever it is, slows down. So next few days, I think we've got a more realistic divergence setup coming.
Yeah, well, if you had just waited, then we would have gotten to that.
Oh, sorry.
So,
Yeah.
Okay, so as I pointed out a little bit, like 3 minutes ago, this is the signal that I'm looking for right here. This is the one down here. If we break down below this, then yeah, my divergence is shot. But I'm actually I'm actually waiting for another trough to form down here, which isn't going to happen today, and it may not happen for the next few days. In fact, I have no idea when it's actually going to happen. But once that trough actually forms, as long as we haven't broken down below this trough down here from May 1st, then we'll be looking at a nice bullish divergence. I'm not concerned about price breaking its previous lows. It already has broken its previous lows. I'm concerned about this neural strength indicator down here. If it manages to go down and break this previous low, then yeah, that blows that divergence out of the water and it's no longer viable anymore. But we're still waiting for a trough to form in price, and we're waiting for a trough to form in this neural indicator, this neural strength indicator, so that we can actually see a proper divergence set up for the British pound US dollar. So yes, you're correct. It's not divergence right now, but that's why we're waiting for a trough to form so that we can actually have
got you. Sorry
to
jump in there.
That's no problem. It helps clarify things for everyone who's watching, because if everyone who was watching was thinking the same thing, which it's pretty good chance they were. Okay, I'm going to go ahead and switch back to us. Hey, there we are. All right. Now, you said that you had some stuff that you wanted to look at in currencies as well, right?
Two things. One, we talked a good bit about the Aussie yen over the past couple of weeks. Been telling people, watch out, it's coming, it's going to turn. And I hope this was useful for you because, oh wow, did it ever turn. And today, it's really rocking higher. And in fact, today it sort of broke all of its trend lines here. You can see even the shorter term ones. So this is probably the last best entry for this. We've got a massive inverse head and shoulders, only broken today. Good chance it comes back, retests, and heads back up. So if you're lucky, you get that if you actually end up wanting to take this trade. But meanwhile, we're talking about 80.58 up to 84.07. This is like a 400 pip target prediction. Now, I don't usually put a lot of stock in or value in price patterns predictions, but when they're high volatility and stretched like that, it's worthy of note, because if in fact this thing, well, look at what it's done every time it's been in this range: down fast, up fast, down fast. So if that were to happen again, an up fast kind of thing, that could be a very fast 400 pip move on the Aussie yen. But more important than that is when the Aussie yen makes this particular change, it means a change in global risk sentiment, which of course totally makes sense. Why? You've got today's the news about trade war and U.S. and China relations softening, that sort of thing. Makes total sense why then a stock or a currency pair which has an indication that global risk appetite is increasing. Well, there you go, right? That's just what you expect. Second thing is just to point out this pair, the Euro Aussie. For people in the currency world, this may not be your list of top 10 currencies, but I really like to pay attention to the Euro Aussie because it is such a trending, it can be a very noisy trend, but it has very long trends. Well, all currency pairs in some cases do, but the Euro Aussie has these really nice trends that kind of get going and keep going. And look what it has done today. I mean, if we look here at the, let's see, can I do this with the new computer setup? Oh, look at me go. All right, sorry folks, while I just get excited about myself, that's all. That's where we are today. Broken this otherwise very strong, now very noisy, admittedly very noisy trend, but we've broken it. And wow, what's the potential for us to continue, right? I don't know that it's going to be linear, but if it is, that's a huge move, right? And we may just be getting started because this came down, clearly it paused here as people began to think, well, retrace, trend change, and then no. So possible new downward trend in the Euro Aussie. That would, of course, correspond with the idea that the Australian dollar is going higher. We saw what it was doing against the yen. We see here what it's doing against the Kiwi. And we see what it's doing here against the dollar. Yes, against the US dollar. That is a difficult feat right now because the dollar's been very strong. But look at this, squished up double diamond pattern, or diamond pattern actually. Big downward move, big breakout. Good potential for the Aussie on all currencies to do well. So it's just a matter of which pair do you want to play it on. Short on the Euro Aussie or long on the Aussie versus other pairs. Anyway, that's just what I wanted to point out.
Awesome. All right. Well, let's switch back to us again. And I think considering this is a Monday, we're going to go ahead and wrap this up a little bit early because we've got a whole lot of planning to do for tomorrow's show with Scott. So we will be sending out more information about what we'll be doing tomorrow, when we'll be starting, and all that cool stuff. We'll be starting about 15 minutes early tomorrow to accommodate Scott Cook coming in for the show. And we'll also be starting up some brand new cool stuff next week, and we'll announce that a little bit later this week. But that cool stuff's going to be involving some market reviews, and I don't know, gosh, there's so much cool stuff coming. So anyways, we're going to wrap this up now. Thank you for being here, and we look forward to seeing you tomorrow. I guess goodbye for now.